Well, happy Friday, everyone. Hello, hello. Tony, Len, hi, RJ. Hey, Mike. Carol, David, hello. Hi, Dean. Hi, Anthony. How are you? Get a little pump back up here. I should say pump back down here. I'm talking about the VIX pumping back up here a bit. Debbie, Andrew, Gordon, Jackie, Mike, hello. Hi, Catherine. Hi, Rick and Karen. Hello.
Hey, Nate.
Good morning, Graham. Happy Friday.
Looking a little sunburned after your big golf outing yesterday.
Yeah, it was hot, and I did not even consider bringing sunscreen with me, which was really a wise decision in hindsight.
That is tough.
And there was nowhere to hide. Hi, Gary. Mike. Lots of mics. Hi, Hank. Hello. Another mic. Des, hello. All right. We're getting a little more downside push here. Let's see.
Yeah, I posted in Telegram that the S&P was going for the gap fill. It did fill the gap, and then filled the gap by 30 cents, and now back down to almost where we started,
Yeah.
but not where we were last night. Did
No.
anyone see the news? I mean, what is this? 7:55 p.m. Markets just went straight down. Mike is a good name.
Hi, Carol.
But gold, on the other hand, which makes sense, is going up.
Yeah,
Actually,
got a pretty darn good pop in gold there.
almost all-time highs. I don't know if it hit it. Not quite. $25 away. 120% on an options trade, Mike. Nice.
All right, let me pull over our setup here. I gotta move some things out of the way. Get going here. Yeah, I mean the market. It's pretty reactionary. I think is a good word. Kind of all over the place. I mean, I think we're going to see some short-term effects, some medium-term effects, and some long-term effects from the Middle Eastern conflict. If you guys follow me in Telegram, I posted. I think the short-term reaction will be a little bit of a sell-off of the reaction, primarily because that conflict is not like a major surprise in reality. It's been brewing for a long time, and I think in the short term doesn't really affect the U.S. markets in significant ways. But then I think in the longer term, the U.S. will step in and be more involved than the current optics. There will be more headlines. We could see an announcement today or press conference today that says the U.S. is doing X, Y, and Z, and that could hit the market in either direction. So I think lots of kind of undetermined right now. But my short term play, which I'll give you guys here in a second, is actually to downplay the volatility a little bit. And then I think we'll see more action and announcements and press conferences and things here over the next couple of weeks. Okay, let's share the screen. There we go. Should be seeing that. All right, folks. Hopefully, having a great Friday. Looking forward to a good weekend. We are going to be going through a little bit of a different type of session today. So here's our agenda for today. We've got Free Trade Friday. I'm going to give you the trade that I like right now on the VIX. And then we have this Ask Me Anything session. So we're going to go through a couple questions. We got a couple more from you guys. And then, of course, in the chat, we just wanted to create some time because usually in the opening playbook, we get pretty deep into some trainings. We have 80 slides of training materials, and then we have lots of questions that we try to get to, but we don't always have, or actually, we very rarely have, kind of an open forum where we can talk about whatever. We can talk about how a certain option trade works, or why we do a certain thing within a strategy, or how we handle risk, or all these different kind of topics. We don't typically have an open forum for you guys to be able to talk about that. And so we thought we'll try to open it up. I mean, I'm sure we won't get to everything in one session, but we'll try to open it up today and give you guys the opportunity, along with a couple questions I've received over email and in the forum today, just to ask, what you guys have in mind, or topics that, you wish we would discuss, but we don't always get to get into. So we'll do that today. And then I'm going to give you a sneak peek of the income machine. As you guys know, we've been working on the income machine. I don't know. You probably heard me start talking about this, in March, maybe, of working on this tool that I think is kind of a game changing, first of its kind tool. So it's probably the most excited I've been about really anything I've ever worked on. That probably also has to do with the amount of work I've put into it, because when you work long and hard on something, you kind of have a vested interest in it to a different level. And so we'll do a little bit of a sneak peek on that. Including planning on giving everyone a chance to try it for free coming very soon. Should be Monday that everyone gets a chance to actually have a chance to check out the income machine for free. So with that, let's jump into the free trade. This is that short-term VIX trade. Let me pull that up real quick here. I think I have to do it from the window here for you guys to see it. Okay, try that. All right, so obviously, market's taking a hit right now. SPY and Q's down about 0.9%. VIX jumped about 13% over $20. And so the short-term play here, the VIX has these weird expiration dates. So you actually have a nice 4-day expiration, which is normally kind of weird, but I think works well for the timing of the trade that I like right here. It gives us till Tuesday, end of day. And what we want to do, or what I want to do here, is I want to trade for the VIX to finish back below $20. So that's only about a 1% or 1.5% move here. Well, now 2% move because it's bumping, but about a 2% move. And the VIX moves a lot. It's moved up 13% today, but had already kind of traded back down below 20. So that is basically a nothing burger move for the VIX. If we get any kind of calmness in the VIX over the weekend and into Tuesday, we should see it pretty easily come back below 20. Now, if we get the opposite, it could go to 30 just as quick, because that's the nature of the VIX. But when I want to trade it is actually down to below 20. And the way you can do this, you take this 4-day expiration on VIX, June 18th. And remember, we want to make sure we use a limit here because the spreads are going to be fairly wide. And this time, instead of doing a call spread like we usually do in most of our trades, we're actually going to do a bear put spread. Okay, so we're actually going to trade this to the downside below 20. And so what you would do is you would buy this spread here. Okay, as long as we can get in for a decent price. It's about 34 cents. Let me try if I go. Let me try one down here, so if we can get much better. Yeah, let's do that. Let's do a full dollar here and do the 2050 1950. That still is going to give us about an 80% ROI on the VIX finishing below 1950. I think that's a better opportunity. So let me do this one here. I'll put it in the trade sheet, and then I can post it here for you as well. in the chat. So just give me a second. Get this posted on both the sheet. If you guys are VIP members, hopefully you know where to go by now. Just hit that trade sheet, and that'll have all these trades in there for you. And again, this is going to be the put side. So this is a rare trade. We don't usually have the put. So it's going to be a buy to open the June 18, 2050 VIX put, and then a sell to open the June 18, 1950 VIX put. It looks like you can get in about 59 cents here. And make sure you use a limit order. You don't want to just market order this because you could pay at the top end in the 65 to 70 cents. You definitely don't want to do that. You want to pay 60 cents or less for this trade. And so your ROI on that is going to be pretty juicy, which is one thing we'll talk about in today's session. So let me go ahead and post that there for you. That's the 2050, the 1950, coming into about 58 cents. And what we want to see, we just want to see the VIX fall off here. If you go and actually look at the VIX on the chart, you can see how quickly it moves. So like these spikes like this that got up to 25 were down to 22 by the end of the day. Huge move in terms of percentages, but in terms of ATR and traditional move on the VIX, really not a significant move at all. In fact, if we just fill the gap back to the downside, we'll be well below our level here because that gap's at about 18 bucks a share on VIX. So that's our trade, free trade Friday. I have one more trade I'll mention here toward the end that might be interesting as well, a little more of a conservative trade, but this is the free trade Friday right there on VIX. All right, posted that in the chat, and it is in the members area as well. All right, let me get back to our slideshow so we can keep rolling along. Yes, this is the put side. See there it says 2050 VIX put, 1950 VIX put. So both are puts, but it's still a debit. Still directional to the downside. All right. Yeah, you could trade UVXY, SVXY, VXX. Actually, a lot that you can trade. I like trading the VIX right now, just frankly because that goofy expiration date gives me a nice short-term opportunity on it for Tuesday. So I kind of like the idea of that 4-day hold time as a good opportunity for this trade. Short enough, but doesn't have to be today that we can get it to move back down. All right, let's keep rolling along here. So the question, we have 4 or 5 of these. And then, like I said, if you guys have additional questions, by all means, that's what we're here for. So what happens if I am assigned early on a debit spread? Give me a quick yes in the chat if you have ever asked me this question or others this question, or have concerns about being assigned on a spread. I know this is one of the most common ones that I've gotten personally to my email with services like automated options or overnight options. This is definitely one of the big questions that we get. And the answer, I think, tends to surprise people. Raymond said, very concerned. Yes, yes, yes. Concerned. Okay. So the early assignment here answer often surprises people. Early assignment is actually the best case scenario for a debit spread. So if you get assigned early on a debit spread, it's actually the best thing that can happen to you, because it means you can exercise your sold call or put, but in most cases sold call, and generate the full profit potential of the trade. Okay, so let's do an example. Let's say that the spread you put on was a buy to open 53 Oklo call and a sell to open $54 Oklo call. A very common kind of trade that we would make with a debit spread. Okay. Then you get the message from your broker. Anyone had one of these? I just got one the other day. I loved it. Our records indicate contracts of Oklo with this expiration date, $53 call options, has been exercised in your account indicated above. Uh-oh, spaghetti-o. That's your first reaction when you get that email from your broker. But what it means is that you now own shares of Oklo stock at $53. Now, the scary part is that you might have a small account and all of a sudden you own $53,000 in shares that you can't afford to own. And that's why it's kind of easy to freak out if you get one of those messages. You have a $5,000 account and your broker says, hey, by the way, you've been assigned $53,000 of shares of Oklo. And you think, oh my goodness, what am I going to do? But remember the trade. And this is really what's important. And I wish the brokers did a lot better job of explaining the situation. But remember the trade, okay? You bought to open a $53 call. That's the one they just told you was assigned. And you sold to open a $54 Oklo call. They exercised these options, which means you own shares of Oklo at $53. If you did 10 contracts, you own $53,000 worth of Oklo shares, right? You own shares at $53. But this leg of your trade gives you the right to sell shares at $54. That's what this leg of your trade means. You're long $53,000 worth of shares of Oklo, but you have the right to sell shares at $54. So you own shares at 53 and you can sell shares at 54. Guys, what does that mean? If I've been assigned shares at $53 and I'm able to sell shares at $54, it means I'm making $1 on every single share that I've been assigned. So I make $1 per contract, which is the max value of the spread. By the way, even if you had a target planning to make less profit. So even if I bought this spread for 50 cents and I had a target for 80 cents, if I get assigned, I make even more than I was planning on making. I make the full $1. So just keep in mind, folks, anytime you have a debit spread, you can only get assigned the lower strike here on the call, and you will always own the ability to sell the higher strike, which means you will always make money. On this debit spread, you can't lose money. The only one that can be assigned to you early is this $53 one, and you're the only one who's allowed to exercise this $54 one at your own timing and convenience, in which case, if you get exercised, you obviously do exercise it. Now, the next question might be, well, how does that work? What do I do? Well, it's actually really easy. In almost every broker, you can essentially right-click the position and exercise it. That's how almost every broker works. But if you have any concerns or you're not sure, just call your broker, say, hey, I still own the $54 sold. Please exercise those for me. That's it. Done. Automatic. And by the way, your broker should do it automatically for you anyway, even if you have no clue what's happening, because if you have a small account especially, they should go ahead and do that for you, and then you'll get the full value. But just in case they don't, right-click, choose exercise, or give them a call. Let them know, hey, I have this position. I want it exercise because I want to make the full $1. Right? And no, your sold side cannot be assigned against you. You are the only one who can exercise that. It's only the other side, which means if it ever happens, you will make full money. Okay? This is for early assignment. Question number 2 is, how much do I chase a spread when trying to enter? All right. This is a question I get a ton of the time. Hey, Nate, you did a trade. The market bounced right at the time you were entering it. How much more do I pay for the spread? If it's a 50 cent, do I pay 55? Do I pay 60? What do I pay? Well, this one's a little tougher to answer because there are lots of factors to consider when making a trade, right? So you might really like the trade, and that's a factor. I really want to get in the trade. Or you might think, well, hey, it's a really big risk reward. So even if I pay a couple pennies more, I'm still going to make a lot of profit on the trade, right? Lots of different factors. But the biggest thing to understand is that the reward potential of a spread is capped, okay? Which means the more you pay, the more you lower your risk to reward, right? Because it's capped. So the more you pay, you're shifting that risk reward. It's not like a call option, a regular call option, where you could pay $1 and it could go up to $10, or you could pay $1.50 and it could go up to $15 and all be the same. It's always capped. So for example, let's say I want to trade an XLF $49, $50 call spread for 46 cents. Okay, so I want to buy to open 49, sell to open 50. This is a $49, $50 call spread for 46 cents. The max value here is $1, right? Because the difference in your strike prices. So I already know going in, the max that this spread can ever be worth is $1. Paying 46 cents means 54 cents of potential profit. Why? Because the max value is $1. If I pay 46, $1 minus 46, I now know that my potential profit is 54 cents or 117% gain potential. Okay, before I move on to the next slide, does this make sense to everyone? You're trading at $49.50, you know your max value is $1, so you know the risk reward is the difference in whatever you pay. You paid 46, now you have 54 cents of potential profit because that's how you get to the max value of $1, and that's where the ROI comes from. In a spread, the ROI always comes from what you paid relative to the max value of the spread. All right? Good? Everyone good with that? Because you have to understand that part first, and then we can talk about how that's going to change. All right, cool. So this is where we started out. 117% ROI potential because we paid 46, 54 left over within the full dollar value here. So what happens if I chase 2 pennies? So I went from 46 to 48. Well, keep in mind, I'm not just paying 2 pennies more. My reward is coming down 2 pennies, right? Because the max value is still $1. So 48 now goes to 52. What happens? I went from 117% to 108% ROI potential. What happens if I chase 5 pennies? I went from 46 cents to 51 cents. But remember, I'm not just paying more, it's also coming off the reward because that is capped, right? Now I'm down to a 96% ROI potential. What if I chase 10 pennies? Again, now instead of paying 46 cents, I'm paying 56 cents, but it's also coming off my reward side. Now it's gone down to a 78% ROI potential. Notice how quickly this trade went from 117% profit potential down to 78 cents or 78%. It might seem like, I'm only chasing 4 or 5 or 6 pennies, but you got to remember you're paying more while also reducing your net profit potential. And so you're getting a more dramatic adjustment in the risk reward than you may realize because of the cap nature of the spreads. Okay. So that's really important there to understand how that risk reward sliding scale works over the course of paying more or paying less for the trade. Just in my opinion, is not to pay more than about 5% the recommended debit for any trade, right? So if it's a $5 spread and you're paying $2.40, maybe you'll pay 8 pennies extra. But if it's a dollar spread and you're looking to pay 50 cents, you'll probably only chase by about 2 pennies at the max. So this 5% number, I think, is a pretty good rule of thumb. Obviously, it comes down to you guys making a personal decision, but I just want you to really understand that sliding scale of risk reward when it comes to spreads, because that capped nature of the spread has a lot to do with, whether you should still take a trade in terms of the risk reward. So hopefully that answers that question and makes sense to you guys. And that risk reward, becomes more clear and obvious as you think about whether you should chase a trade or pay more for a debit spread. All right, Graham, you want to take this one?
Yep, sounds good. Sometimes we wonder, and it's a great question to ask, especially, if you're trading basic calls, basic puts. This is definitely a question you want to consider. But for spreads, Is there a good rule of thumb for how much volume an option should have to trade it or open interest? Because we want to trade liquid options, right? Well, actually, my quick answer is no. The volume and open interest really, at the end of the day, does not matter a whole lot to us simply because we should always be using a limit order on your entries. Does everyone know the difference between a limit order and a market order? A market order just says, fill me at whatever price works for you. In which case, on spreads, you'll end up paying top dollar every single time. Sometimes they'll even fill you above the reasonable amount by a lot.
Yeah.
With spreads, we should always use a limit order. A limit order says, this is the amount I'm willing to pay for this spread. If you want to charge me more than that, that's fine. I'm not buying it.
Right.
I'm going to stick here at my price and you can fill me there, or we'll just, skip and pass on that trade. So that's why, to me, volume and open interest is not a big factor because I'm paying what I'm going to pay no matter what.
Yeah.
I'm not moving.
And just, I mean, going back here real quick. So you might think, hey, the max I want to do is this one, the 96 ROI potential. But you throw in a market order and they fill you at 75 cents. Now you've taken a 96% ROI potential and turned it into a 33% ROI potential based on their fill. So people think, oh, it might be a little extra. It can be a dramatic. You turned a big kind of home run style trade into a very limited prop potential trade by letting them fill you often.
Yep. So that's why my answer is no. Now, you guys know I like to hold till expiration. So we have some people saying, well, what if you want to sell early? Then it could be a little bit trickier if you want to get out earlier. I like to hold till expiration. But looking at this, if you're looking at HWM, which has been a great stock all year, it's been a monster. I love the stock. And if you look at the options change, you see the lower open interest. And this was today's volume at the open. So, of course, it's NAs pretty much across the board. But if you hit that next slide, Nate, low open interest. So look at the contracts traded, not a single one over 1,000. And this is on the monthlies, not even the weeklies. So these should be the most liquid and low volume. Again, this was taken at the open, so it's probably higher now. But we just don't want to rush in at any given price. So we might click our wrap order spread. And this example is pretty good, but it might say $1.75, to which we know when we punch in our calculator, hey, that's not what we're going for.
Yeah.
We always want to go for about that 1-to-1 risk to reward. So in this case, I got the mid price down to 120 when HWM was about 171. And then I just set that limit order. So if you see there right next to the price that we're willing to pay, it says 120 debit. And then the next side, it says limit. A lot of brokers will automatically have that set to market. Just make sure to double check and make sure that's a limit. So what this order says is that I am willing to pay $1.20 to get into this. If it's $1.21, I'm not buying it. If it's $1.70, I'm not buying it. $1.20 or less. And then I set the trade, send it off. Oh, you're good. In my experience, about 75% of the time, you will actually get filled, even if there's lower volume in the options at the price you want to enter. And then the other 25% of the time, it won't fill, which, may be annoying, but that's okay because we don't want to force anything and we can just simply move on to the next trade. So the key there is just use a limit order to get filled if there is lower, actually regardless, but especially if there's lower volume and open interest.
Yeah. Joseph, I know you've had, you've mentioned the 330 thing, and I know we've emailed about it some. That really shouldn't be very common. I don't know exactly how Robinhood's treating it. It really only should happen if the price is close to the strike prices. Is really the only time that they should enact the 330 rule. Now, maybe if you have a smaller account, they'll do it more aggressively. I'm not 100% sure. But in the quote unquote the old days, it was really only a rule that you would be enacted if they were worried about you getting stuck on one side of the trade and didn't have the margin to handle it. So
it sounds like Robinhood might be the common denominator here. Maybe Robinhood.
Yeah, Mike, that should and Mike, they also used to give you an option that says I'm monitoring. So they would say, hey, this is going to close at 330, and then they would give to say like, hey, I'm monitoring the trade, so don't manually close, don't automatically close it. I'm going to be monitoring it, and it seems like they've kind of taken that option away from people as well. Now, Mike, I imagine that they won't do it if you're like way clear of the strike prices, right? Like if you have $49.50 XLF and it's, Friday and XLF is at $53 a share, I imagine they're not exiting you at 330 in those cases at least. But, on an overnight option trade where we're often within $1 of price, then they are kicking you out. I'm guessing is the variance. But still, interesting that they have gotten seemingly much more aggressive about that.
And to be clear, high volume, high open interest is definitely always better, for sure, 100% of the time. You would always prefer that. However, I will take spreads where there's low volume, low open interest, knowing that I'm intending to hold it to expiration. Now, my brokerage lets me hold it through expiration and then exercises from there. But I just know that if I'm going to do that, I'm going to pick the price that makes sense to me, and I'm going to set a limit order.
Yep. All right, let's get into our question number 4. Why do Graham and I specifically like debit spreads instead of credit spreads? Or at least most often use debit spreads instead of credit spreads. Now, Graham and I were talking. There are some reasons we like credit spreads, to be honest. But I'm going to give you 2 that I like debit spreads. Okay, so there's 2 main reasons for me that I like debit spreads over credit spreads. But before we can answer the question, we do need to kill the entire myth around debit spreads versus credit spreads, which I think is one of the most common myths that you'll hear if you are listening to, people talk about these kind of things. So if someone has ever told you or said on a webinar or put out a document that says, credit spreads are for income and debit spreads are for directional trading, or credit spreads let you take advantage of time decay and debit spreads are more like call options, or anything like that. I mean, let me know in the chat if you've heard anyone say anything even similar to that, because I know I've heard it 1,000 times over, which I think is the craziest thing ever. Oh, credit spreads are for income. That's how you take advantage of time decay. That's how you do an income trade. That's how you do a defensive trade. All these different things I've heard people say over and over and over again, which, let me just be super clear here. It's not true. It's just simply untrue and incorrect information. Debit spreads can be constructed in any way you want. Okay. So they can be used as defensive trade way below the price of a stock. They can be used like a wrap order, like Graham often does, at the same price as the stock. They can be used as a directional trade well above the price of the stock, where you need a big directional move. And they can be used as anything in between. So if you heard someone say, hey, well, we want to make income on Tesla below the current price, so we're going to use a credit spread, you could just construct this trade the exact same way with a debit spread. Below the price, have the same risk reward. It won't function any differently other than the idea of getting the credit and waiting for it to expire worthless and keeping the credit versus paying the debit and letting it expire at $1 and getting the time in between. Now, there is one advantage that you could make the case for specifically for income trades with credit spreads, which is that if Tesla's at 320 and I want to do a defensive trade below the stock price at 300, meaning I don't think there's any danger of this trade losing, I think it will stay, above there, the credit spread will let the options expire worthless. And so you don't have any fees on the options expiring or anything like that. The debit spread will function exactly the same and exercise for the full $1. So you'll make the same ROI, but you might have some exercise fees on the debit spread versus the credit spread. So that's the one advantage you could kind of point to.
Let me actually flip that notion and tell you why I think that the debit spread in the money may be a better advantage than the credit spread. So like Nate said, if the price is up here and your spread is down here deep in the money and you're using a credit spread, as long as it stays above at the end of expiration, it goes away, you make your full profit. On a debit spread, you have the opportunity that, let's say it's Tuesday, the trade's not even done with, and the guy you sold it to exercises. So you exercise yours and you hit your full profit on Tuesday instead of having to wait till Friday when a lot of things can change.
Yeah.
So that's where I think a debit spreads actually could give an advantage even in that scenario, because you can get your full profit early.
Right. Which is pretty much what I'm talking about in number 2 here. Agreed. So the 2 reasons for me are, number 1, it's easy to understand and do the math. Simple reason, but honestly, I find that it helps a lot of traders. I find that a lot of traders, if I say, hey, let's do a credit spread. Let's grab 70 cents up here and look for it to expire worthless. They have a little bit of a tough time understanding what their risk reward is, how much they're actually making versus how much they're risking, and some things like that that are just a little bit tougher because you're doing all the math in reverse. To me, I find it easier to say, hey, we're paying $80. We want to make $20. Therefore, it's 25% ROI. So it functions a lot more like a traditional call option or a traditional buying of a put option, where you kind of know what you're paying, you know what your target is, and the risk reward is very easy. You want to sell it for more than you paid for it. So I find, as far as teaching it and people understanding it, the debit spread is a lot easier for that reason. You want to pay a certain price and you want to sell it for more than what you paid. And then the other reason is what Graham mentioned. That early assignment, which we talked about, is kind of the first big question. It removes that risk completely. Now you have the potential to get a full profit before the trade is even finished. If you ever do get assigned shares, it's a good thing. Happy day. Open a bottle of champagne because you made your full money. Versus a credit spread, when you get assigned, typically you're taking the full loss and not the full profit. So not always, but typically. And so those are really the two big reasons for me that I almost always err on the side of a debit spread. I used to do more credit spreads, but frankly, I had a lot of people who were following me that had trouble understanding the math and knowing what we were doing. And then I had a lot of people, when they did get assigned shares with the credit spread, they really kind of freaked out because they didn't realize what was happening. To me, it was no big deal. I'm just taking a loss on the trade, which, hey, losses happen. Well, now we flip that on its head, and anytime anyone gets assigned, I just say, hey, good job. You're getting a full profit. And it's just a lot easier to handle. Now, this is a question we've already got in the chat today. We've been talking about early assignment, but what happens if a debit spread expires between strike prices? All right. I'm not sure who asked this, but if you're in the chat and you asked this question, this one's for you. I know we got a couple of people who asked about this. So we're not talking about early assignment now. We're talking about what happens if the trade actually expires between the buy and the sold call. So if a debit spread expires between strikes, the in-the-money leg will be exercised while the out-of-the-money leg expires worthless. All right? So, for example, you got the $49.50 call spread on XLF for June 13th, and the closing bell of price on XLF is between $49 and $49.99. Okay, so it's above $49, but below $50. It means you will be assigned shares of XLF at $49, but you will not have the right to sell shares at $50, because this side, the one that gave you the right to sell them at $50, is a void contract. It expires worthless. You no longer have that right. So you only have one side of the trade here. Now, this is the scenario that we want to avoid unless you want to own the shares anyway. Okay? So unless you just say, hey, I'd love to own shares of XLF at $49, in which case, go ahead, let it expire, doesn't matter. But most people want to avoid that scenario. And the good news is it's very easy to avoid that scenario. It's not some risk that you can't avoid that you just have to be willing to take on the chin if you're trading spreads. All we have to do is check our trade around 3 p.m. to 3:30 p.m. And if it's very close to settling in between strikes, we just exit with a limit order to make sure we're out of the trade before expiration. Now, like Joseph and some other people shared, Robinhood and some other brokers will actually do this for you because they don't want you to be on the hook for those shares if you can't afford them. But most brokers won't, or they'll let you monitor it. And the easy way to handle that is just to trade or just to add a limit to manually exit the trade before that expiration happens. Now, depending on what you paid for the spread, this is usually around a break-even result, right? It depends on what you paid. If you went for a big trade and you paid, very cheap for the spread, you'll still make a profit by getting out at the end of the day. If you were going for more of an income trade, you paid a lot of value, you might take a smaller loss. But typically, it's going to be closer to break-even because the trade is between those two strikes. Now, one important note here is that if you already have a good till cancel limit, which is what I usually trade with, you need to cancel that limit and set up a new closing order. Because if that limit is open and then you go to set up a new closing order, your broker will give you an error and say, hey, you're going to be you're overselling one side or you're overbuying one side of the position. You have to first cancel that limit, then set up a new limit. And like Graham showed you, you want to probably go for the mid price, maybe try to get a couple pennies more and just get out of the trade before expiration if you don't want to be holding one side of the trade. Okay, so that is how we want to handle that. Any questions now beyond those? We just took 5 or 6 of the most common ones that we got, but if you have more questions, we have about 15 minutes before our income machine sneak peek. Actually, let me share something with you real quick. Well, go ahead and type questions you have in the chat. I want to show you something that I think is pretty cool. That will be part of our income machine sneak peek here. Let me just show you this. This is a trade that the income machine found that I thought was pretty cool. So this is ticker D. Okay, pretty defensive stock. As you can see, it's actually green today. One of the staple stocks, not a big trending stock, but doesn't typically give away a ton. You can see here it's not going to set any records in growth. Had a pretty ugly 2022, as a lot of these stocks did, but a pretty stable stock over the short term. And so this is a trade that the income machine found. And the reason that the income machine found this stock is because it meets certain criteria. Weekly breakpoint, ATR stabilizing, pulled back and looks like a corrective or continuation move, and some underlying reasons that we like D for income trades. Now, let me ask you a question. How many of you think, this is a daily chart, by the way, so it's a fairly long-term chart. How many of you think that if we traded D as it looks like a continuation stock and we put our line in the sand, which means if it stayed above this line, this white line, that the probability over the next 4 weeks, so as we grind over the next 4 weeks, that will stay above this white line is pretty good? Okay, give me a yes in the chat, just based on functionally here. If you think staying above this white line, now that we've got 3 days, we look like it's a continuation move, is pretty good. Because I think that's a pretty decent setup. Yes, yes. Okay, got some yeses. LK got a yes. Charles likes it. I like it too. What if we stayed below this line here? Okay, so get rid of this line. What if we made money if it was this white line? How many of you think the probability on this white line pretty darn good? Giving a pretty stable, pretty defensive stock that doesn't make huge moves very often, pretty good above this white line. I think the probability of that trade is pretty good. Yes, 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 yes. Well, here's what I like about the income machine. The income machine dug through all the options, which I would never have time to do, and it found not this line, but this line. How many of you think that's a trade that's going to win most of the time? So here's the thing. I would not have found this trade because there's 5,000 stocks and there's millions of options on those stocks. Where if I said, hey, I want to make a trade that's going to make 15% ROI, a good defensive trade, I would normally be trading, somewhere in here, or maybe in here, right? Hey, 15%, something like that. The income machine dug through the options and found this bad boy, that if it stays above $50 a share, which means the stock can drop 12%, the underlying stock can lose 12% of its value, and we're still going to make money on the trade. Now, we're not talking about 100% winner, guys. We're talking about 12, 13, 14% ROI. Not income. These are income, based trades. But I thought that was just incredible. And I don't know about you guys, but if you could find trades like this, not like once a month, but literally every day, actually multiple times a day, it'll spit out new opportunities. I think that's pretty cool. These are the kind of trades I'm going to be taking more and more and more often, simply because, even at kind of an income setting, the opportunity to make money while a stock drops 12%, I think is just crazy good. So this is D. The trade that it found lets the stock drop almost 12% and still make money. And I'll give you that trade if you want it here in just a minute. So anyway, just wanted to kind of, while we were waiting for some questions to come in, I thought that was pretty cool to be able to find a trade like that. Because once again, just imagine looking through 5,000 tickers to find ones that meet those criteria, and then going through all the different option states to find, is there kind of a hack? Is there one that gives me just an unfair risk-reward advantage based on what the price is? I feel pretty comfortable saying no human being could do that. No human being could find that opportunity. I feel pretty comfortable saying.
You need a whole trade desk with like 5,000 people working it.
Yeah.
The other thing cool is like, when's the last time you guys have traded Dominion Energy?
Well, exactly.
When's the last time you pulled up a stock or pulled up a chart and said, "Let me just check in on good old Dominion"? Probably not in over a year, or probably not since 2022 when when energies were red hot.
Yeah.
But it found it, so that's cool. Nate, do you want to go ahead and post that link here?
Or do you want shoot. Yes, I do. I do want to post it.
We are
because we're Monday. It's official now. I should have started with that, by the way.
Well, unless it's not official yet. We need 500 people.
How many it's close to official.
On the petition. I think we're about 350 now.
Oh, okay. I thought we were over 400.
No, I don't know. We might be. I haven't checked today.
All right.
If we get over 500, we're opening up free access.
So I should say it's not official. I think I told Telegram it was going to be official. Okay. Audit. It's not official. We need you guys to actually go through, fill out the petition, and we need to get our 500 plus so that we can officially on Monday open the income machine for free 30 days of access. Something, guys, we have, as far as I know, never done in the history of our company, I believe, because there's a lot of challenges with, setting up access and doing all those things that might sound, might sound simple, but believe me, not simple. And so you have to fill out that form. What it does, it takes you here. Let me just show you. Here's what it does. If you click that link, it's going to take you to this page. And it's basically going to ask you, hey, do you want to get free access? Do you want to try this out and see it work? So instead of just taking my word for it, you can actually get a chance to try it, take real trades. And it's not like you're going to get one trade. You're going to be able to use it every day. You could probably take 5 trades a day if you wanted to. But for that to happen, we need you guys to enter your email and your phone number, click the link on this page, which you can do just by clicking that link that I pushed in there. So make sure that you do that. And if you do that, and 196 more people do that, which might be more like 150 more people now, but if the rest of you guys do that, then it'll be official and we will get you free access for about 30 days. Yeah, many of you guys have already done it, but some of you have not. And if you have not, well, we need your support.
Jeffrey says, okay, people, get your friends, family, and pets to sign up. That's amazing. All right, we did have 2 questions that I saw stick out here in the chat. First question is, can you explain the cash close on XSP and what, how that makes it different versus other stocks where you get assigned?
Question. Yeah, do you want to take that one or do you want me to take it?
You can take it. I was going to show them. Well,
okay.
I mean, anyone can take it. I was going to show them if they have questions like that. I was going to do it for the 5th time this week. Pull up ChatGPT and type in that exact question.
Oh, don't do that. We should sound smarter. No, I'm just kidding. That is a great idea. But go ahead, do that. The short answer is it's options only. There is no underlying.
There's no shares to be assigned.
So there are no shares that can be assigned to you. Is the short answer there. But if you want to show them the ChatGPT response, by all means.
Yeah, check this out. Just because I'm just trying to encourage you guys to start using a tool that is super awesome, super helpful. Let me share my screen here.
And we should, because someone did mention the opening playbook. Guys, we should mention that as far as the plan to do a free trial on Income Machine, opening playbook will be the first people to hear about it. It is going to happen in opening playbook. You will absolutely, and if we hit our cap, opening playbook members absolutely will be the first people to hear about it and get that chance. You just have
to be here Monday.
Right.
So make sure you're here Monday, 10 a.m.
Yes. Yep.
All right, so let's trade. Let's say you're trading XSP. You have a debit spread. We'll go with the debit spread first. And let's say you bought the 598 call and you sold the 599. Right now, XSP is trading in the middle, that 598.52. So let's say what happens if it closes there? It's not, you can't get assigned share. So what does that really mean? Well, what it means is that you're going to collect the difference of the middle of this, what the price is trading for. So just a short answer, right now it'd be about a 51-cent exit price for you, 54 cent now if that's where were to expire. But what you can do is just come here and say, I'm trading. This is ChatGPT. I'm just encouraging you guys, just because we aren't on 24/7, we're only here at 10 a.m. Encourage you guys start using tools like this that are here 24/7 for your questions. So I'm trading XSP debit spread that expires today, and I'm just going to make up information. I bought the 598 call and sold the 599 call. I paid, I'm just going to say 40 cents. And XSP is closing at 598.54. Do I make money? What happens? So I gave it just exact scenario that you could be in right now. Made up these entries because I didn't take that, but let's take a look. Gives you your position. Net debit paid 40 cents. Gives you, it just restates what you post in here. XSP is cash settled based on the official closing value. No shares involved. So here it's going to do the breakdown for you step by step. Calling the money is worth 54 cents. The one you sold is worth 0. So the spread value is 54 cents. You paid 40 cents for the spread. Your profit is now 14 cents per contract. So you make 14 cents per contract, 14 per spread. In other words, I should have used a more round number. Let's see. Let me watch this. I have 10 contracts. How much profit did I make? I made $140 total profit. You can just tell it exactly what it is. This thing's pretty smart. Let's see. What is my percentage return on risk? $35 return on investment there. So that's my quick answer. If you, because we're not around here every day, we're here at 10 a.m. If it's 4 p.m. and you're wondering this, don't feel like you have to wait till Monday at 10 a.m. to ask. Go right here to your good friend, ChatGPT, and lay it all out. It understands the markets really well. It's not going to be, advisor and give you picks, but it can break down things like this for you. So that's my quick answer there.
I love it. I love it. Carla, if someone says fade a trade, they mean do the opposite. So they mean like if you're fading the VIX, then you're looking for it to go down, for example.
There you go, Mike. Fade a trade. Ask ChatGPT. Love it.
Monday session will be recorded. They're all recorded and posted. Sometimes we have some trouble with YouTube because they don't like us posting certain things if we're talking about making money, which we talk about a lot. So every once in a while we get some issues, but by the way, Graham, just fun update here. I pulled up our dear friend, the income machine, and it has now found a spread at this price. If I can switch to my actual thing here. There we go. It has now found a spread down here.
Oh, my word.
So we can now trade Now, again, guys, just to be clear, this is the conservative approach. We're not talking about making a 50% trade. We're talking about making 15%. But 15% ROI, I mean, if you guys are familiar with income techniques, a lot of times people make 5% ROI just to be kind of medium safe. This is a 15% ROI at this level, which is just crazy. Now, I haven't actually tried to put in the trade. So, D doesn't have a ton of volume. Maybe we'll have to get filled a couple cents higher. I'm not sure, but it's going by the mid price right now and showing us that potential. So let me just pop that over here. I'll let me refresh it one more time. See if we can get a updated mid. Here it is.
And the
Okay.
income machine gives you the strike, expiration, option to buy, option to sell, price.
So here it is on D. This is just me skipping to the step because we'll wait a little bit longer to demo the whole thing. But you can see this is a 42.50, 47.50 spread. Now, what's really cool here, and I won't go into everything. I won't go super in the weeds here, but what you guys have to understand is if we were looking for a trade, we probably wouldn't have found D. Then we probably wouldn't have found out that the 35-day options out are the ones that had these juicier opportunities. Then we never would have been able to match up all the different spreads. Like we never even would have looked at a $5 spread on D to find these different combinations. It is, I mean, there are millions and millions of combinations of options that you could pair together. It did all that and found this random combination for this random date on a fairly random stock to give us the chance to make 15% on this absurd trade where the stock could go down, 15% on the underlying stock, and we'll still make it. And it does all the numbers for you, tells you the current price, what your spread is, what your break even price is, what your ROI is, the different stock price scenarios, telling you if the stock goes down, X, Y, and Z, what you're going to make money. And this is one of my favorite parts. You can even put in how many contracts you want to trade. So you want to trade 10 contracts, that'll cost about $4,300. You'll make about $650, about a 14.9% ROI over that period of time. And you can even put a target on it and just make 10% ROI as that time decay starts working for you. So this is what you're going to start getting access to. Well, if we get enough people who fill out the form.
We're only like 100 away now.
Yeah. So if you guys want to get access to what I think is the coolest tool in the history of the world, I might be slightly biased, but I think this is insane. This is what you need to fill out the form for. You'll be able to use this a dozen times a day if you want, and it does all that heavy lifting, gives you so much information, and really just the engine behind it to find these trades, I think, is pretty remarkable. So that's the trade. If you want to look at it, it gives you all the details of the trade right there. And no, you don't need Thinkorswim. This is totally web based. You can do it on any brokerage. It's going to do all the power and work for you. So you can see right here, buy the 42.50 actually even gives you the option ID so you can verify it. But with the income machine, these will always be call debit spreads. So we're always going to have call debit spreads on these opportunities. So it's very straightforward. Buy the 42.50 call, sell the 47.50 call, and you can make 15% over the next month with the trade with an insane amount of room to move against you.
And Nate, not to spoil too much, but I know some people here said they'd like to go for a little more juice. The income machine does that too. As a matter of fact, let me go ahead. I'm not trying to give too much away just yet. I know we're still ironing out the kinks here.
You're really going aggressive here.
Yeah, I'm making a little pretty chart for you, Nate, where you can just share screen, share back to that slide deck you were on.
Okay. Hold on, let me put this trade in real quick. 42.50 call.
So for those of you, oops, I'm doing my best to get this done quick so you can show it off. AVGO is another one that popped up today, Nate. I just happened to see it just now when I refreshed.
All right.
There's a couple different routes people can go.
What, did you put that on the thing?
Yeah, just go refresh that slide deck you made.
Okay. Okay. There we go. And
go to the very last slide. There you go.
Oh, nice.
So there's AVGO right now. I have the income machine up here. Look at that, guys. So it gives you multiple different options with multiple lines in the sand. So for I think a lot of people here said 15% sounds great. Look at that lower line. AVGO could go crashing about 10%, and you still make about 13% on your money. That lowest line there, Nate, if you want to circle that with your mouse.
This one right here.
I can't see your mouse.
Oh, I guess because the tab is sharing, so it doesn't show my
So that
cursor.
lowest line there, 13.6%. AVGO could fall all the way down to there, make 13%. If you want to be a little more balanced, check out that one in the middle, 23% return on your for income on your risk. And AVGO can still fall 5% or so from there. And then if you want to be a little more aggressive, 40% return on investment. But look, you still have a nice little, what is that, 3% buffer room on AVGO?
Yeah. And we're not giving this one as much time either. So that's one of the other things you'll hear about. The income machine is dynamically going to lower the time as you get more aggressive, so it has less room to kind of escape your claws there for those bigger wins. So, and that's all done completely automatically by the engine with all the information that you need to trade. I mean, like I said, it's pretty wild stuff. And yes, the income machine is automatically doing this based on the probabilities at expiration. So it's basically telling you at the end of this date, this is what we think is likely going to happen and how much you can make in all those different scenarios. So the cool thing about that is it means zero trade management on your behalf. None. You just set up the trade, choose the one you like, you're done. Let that thing go. And like we talked about today, maybe you want to check it closer to expiration, but it's as simple of a trade as you can do because you're going to put it on and then let it go and let the market do the work. So that link is still pinned up there, guys. If you have not filled out the form, you can do that. And it'll obviously not only help you, but help all of your opening playbook friends out because everyone will get a chance to do this for about 30 days for free, something we've never done before. But I've been talking about this tool for months, saying how incredible I think it is. And I want to give people a chance to actually put it to the test, and give it a try. These will all be called debit spreads. Yep.
Yeah, not day trade, Scott. Yes.
And let me here. I'll throw that trade in there from the trade sheet. This is in the VIP trade sheet. So for you guys who are opening playbook, if you forked over that huge dollar, then you will have access to the trade sheet, which will have that posted in there that you can go back to. But I also posted it in the chat there for you as well.
And we had someone actually, Nate, yesterday we did the fade trade training or just looking for overnight move backwards. One of the trades we took was on eBay, which is up 0.5% today on the underlying. It's up about 10, 15% at the open on the calls. It's probably up a little bit more now. Definitely a little bit more. We did a spread. So someone said yesterday, well, hopefully with this trade, I can make my dollar back. So if you guys took the eBay trade yesterday, should have made your dollar back and then some.
Hopefully, I don't know, and if people can let us in the chat, but hopefully people are net positive on the dollar they've spent on opening playbook and they have a positive ROI. That would be my baseline, hope for the opening playbook VIP members that they are in the green or in the black. I guess that would be and plus ROI. One of the reasons to use fade and not short, other than like Graham said, you can use it in both directions, is that short is actually a technical term that is not what we're doing in most cases. We still throw it around, but actually shorting the stock is really not what we're doing in most cases. We're normally just doing a directional trade. Mid price is showing 435 for me. That this goes back to that limit trading. Oh, just okay. Never mind. It just went crazy. I don't know. Hopefully, no one did a market order and bumped the deep trade up. Going to make sure we're using those limits because the mid price did just shoot up. Make sure you're using a limit order for the 435. Graham, what was your trade on eBay?
I gave him two. I gave him an overnight wrap order, which is up 35% right now. And then a week out call option, which is up about 32%.
Oh, nice. All right. And yeah, if you took the VIX trade, it's got a nice little bit of a head start here at 1980 and some change. So obviously we're looking more for just to settle down over the weekend and open, hopefully in the 18s would be great, but got a little bit of a head start there.
Yeah, and we did have a question on how to use the Apex indicator to pick spreads. So now I'll grab the screen if that's cool.
Yes, let me stop there.
Let me share entire screen. Oh, one thing to say again is that we have been testing out this new platform here. Hopefully, it's for the most part been an enjoyable process. We are going back to Zoom on Monday while we work out some of the finer kinks. So make sure you have Zoom installed for Monday when we do release the income machine for free. Hopefully, looks like we're about 80 people away, so I think we'll get there. So let's take a look at the Apex indicator here. We've had week over week confirmation on Eli Lilly. Now, Eli Lilly has been stuck in a little bit of a downtrend recently, but we know from the Tuesday sessions that healthcare is the strongest seasonal sector for June. So while it's been lagging, it is a strong seasonally sector, and Lilly is giving us week over week entries on the Apex indicator. So if I wanted to trade this right now, what I would do is I would go to the One Click Trading members portal where you have the Apex indicator. And inside there, you should be able to see, scroll down to the stock hit list. This is going to give you the back tested data for every single one of them. So Eli Lilly right here, it's a little bit longer hold time. So this is kind of a poor example, but the profit factor is massive. 31.64 profit factor, 85.5% win rate. So this tells me it may just need some more time here on the spread. Now, I'm not going to go 28 weeks out. This may more so be something that we can just trade every time it expires, just issue another trade if we are still in an entry and try and stack it from there. But what I would look to do is I would look at the profit target here, which is also posted here, 941. And I'm going to give it about 6 weeks to expiration, 5-6 weeks, and then we can roll it from there if it's still active. So I'm going to go to the Lilly monthly July options. I'll make this a little bit bigger. 1 second. All right, here we go. The monthly of 18 July monthly options, and there's two approaches you can take. One, you can go for the full profit target, but keep in mind, like we know from the hit list, this can take some more time to develop. So for me, since I'm not going 28 weeks out, which you could go 28 weeks out, put it by December 1 and put it at the profit target, which actually we could talk about next. But what I'm going to do here is I'm just going to go do one of my elite spreads, which is just one strike out of the money here. In this example, we'll see what's priced at 485. So we can get a little over 100% if Eli Lilly gains $10 from here, which is about a 1.2% move over the next 6 weeks. You can even go further out of the money. 478 entry, $10 max gain. So again, this is something that you can do is you can just look and see, all right, the profit target's 942. I'm not going to trade 942 in a short time frame because this is based on a 28-week hold time, but I am going to start going for that. It's going to start gaining over that time period by just using an out of the money spread, or you can just wrap it. If you wrap it right now, actually, this is a great price if you can get this. Right now, Eli Lilly is trading at 819, basically 820. It's basically at the top of this wrap order. But right now, the 810 and 820 spread is trading for 520. So this, in my opinion, is mispriced at the moment by about $3-4. Maybe not four, but we'll call it $3. So this is a very good price to pay. Again, use a limit order if you're going to do this. This is going to give you 6 weeks for Eli Lilly to gain $1. That's a 0.1% move on the stock. And if it does, you can gain $10 is the max selling price. Right now it's at 510, 96% return on investment if Eli Lilly gains 0.1%, $1 from here. So I'm going to go ahead and send this off again. Use a limit order. Thinkorswim does the calculation for you, and I'll let it sit. Again, if it doesn't fill, it doesn't fill, and you can always bump. Again, I think this one's mispriced a bit at the moment. It should be trading closer to $6-7 in my opinion. But that's how I would do it. You can, if you wanted to, these are bigger strikes. This is also a good viable trade. Buy the 810, sell the 830, but it is going to be more expensive. However, in this instance, you only need Lilly to go up about 1.2% over the next month for you to make over 100% return on investment. Now, it's funny, Nate. I'm in here. I'm going to send this one off, see if it fills. And then I would be willing, in this case, well, it's now moving downwards a bit, but if it were about 820, I would be willing to pay about $10 to enter the 810 to 830 spread, right in the middle of the two strikes. Now, what I was going to say, Nate, is that it's funny. I'm over here trying to explain the math to everyone. What's cool about your income machine is it just shows it to them
Yeah.
so easily, all up front, all done for you. So really excited about that.
Yeah, I think seeing those scenarios too, just over time and training them, are going to help people basically become a lot better traders. Honestly, just seeing, going through the scenarios, seeing the math, all that kind of stuff, it will legitimately just naturally make people understand it and be better traders.
Mm-hmm. Let's see. I have some middle question. Where's the link sending to? I'm not sure, Mark. I'll have to look at that at the end of the questionnaire. All right. Any final questions? I couldn't really see the chat when I was doing that.
Did you post the Lily trade in the chat too, or just the trade sheet?
I am posting it here in the chat.
Okay.
So I gave you those two that I like the best. If you want to, kind of like what we did with the Dream portfolio, you can go out to the December expiration and select the strikes near the profit target. Let me just take a look at this and see what it is. And if it's good, I'll share screen. There's not a lot of volume in it. Oh, actually, there's a couple that have. Oh, wait. I was looking at it. Pop back to the monthlies. Man, going on this large size makes it hard to see. So in Eli Lilly, we said our profit target was 940 over about 28 weeks. The spread, if you were to buy the 920, sell the 940 in December, it's currently at $7. So you make about 180% return on investment if you wanted to go for the full extent of the average return. In my Eli Lilly spread, the 810, 820 did just get filled at 523 by using a limit order and sitting on it and not rushing in. All right. By the way, what do you mean by fade trade in the trade interest? It means it's just we're just going the opposite of the short-term direction, Simon. So if the fade trade trading was if a stock falls 3 days in a row, it's gone down 3 days in a row. What is the short-term direction? It's down. Fade means we are going to place a trade to be on the opposite side of that short-term direction. We're going to go long. That's the fade. Now, the reason fade can go either way is because if a stock's up 6 days in a row, short-term direction is up. We can fade it by going short. Awesome.
No, the IBIT trade, I'm not going to roll over. I'm going for that, hoping for a surge here the next week. I think we were well on our way before the news hit, unfortunately. But yeah, just going to hold that one as a binary trade and look for it to make a bigger move. Probably need Bitcoin to make a 4% move next week, which obviously for Bitcoin is not a huge move, but still significant enough. And we'll see. I think there's actually a decent chance that Bitcoin will get some value push on it under the kind of the uncertainty. It's had these moments where it's acted more like gold and had like a kind of an uncertainty bias to it. So fingers crossed for that. Obviously, I think I think that the news is going to play a big role in all these different assets, but I'm fairly optimistic that Bitcoin can make a move. I'm just not totally optimistic that we're now going to hit new highs in the same timeline that I was hoping we would originally.
Can you repeat the fade short difference? So fade does not mean going long or short. It means you're going the opposite of the near-term direction. So if a stock has gone up 3 days in a row, you would fade it by betting that it's going down the next day. If a stock has gone down 3 days in a row, you would fade it by betting that it's going up over the next day.
By the way, VIX is getting closer to filling that gap already. We're down in the 1959 range. We're only about 10 cents away from getting below our spread already. Let's hope that one keeps cooking.
Awesome.
All right, folks. Well, I think that's it. If you guys have not hit that link, one more plug to do that. Hit that link up there at the top. That's going to take you to that form. Make sure we get enough, of those so that we can officially do that free opportunity starting on Monday, which I'm really looking forward to. I'm looking forward to showing you it in all its glory. I'm looking forward to you guys using it and getting the feedback and all that kind of stuff. So make sure you do that, and we'll see you again Monday. Hope you have a great weekend. Any other housekeeping stuff we need to do?
I think we're good. We got a couple people asking for the link. It is pinned up there,
right? Dex, when you say the link for your VIP room, do you mean the opening playbook VIP? The $1 VIP? Is that what you're asking for, Dex, there? Dex, I'm not sure what you're asking.
If you guys want the dollar code, I just put it as a CTA on the screen, so you can just click that and get the.
Oh, okay.
VIP
so if it's the $1
playbook.
thing, Deanna just posted it. Thank you. That is in there. You can just literally click that link right on your screen.
All right, sweet. Well, appreciate you all being here. Make sure you are here Monday. Let me give one final update for you guys on how close we are. We are 68 people away.
Oh, nice.
From unlocking the free access to the income machine on Monday at 10 a.m. here in the opening playbook. Alito, which calculators? I will check on my end. I don't know which members portal you're in.
Yes, and happy Father's Day. Good point. We got Father's Day here in 2 days. So for all of the dads in the room.
RJ, can I sign up twice?
Graham, including you, happy Father's Day.
Thank you. And you as well, and all the fathers in the room. Yes. Awesome. Well, thank you all for being here, and we'll see you Monday, 10 a.m. sharp.
Monday, big day. Pretty pumped up. See y'all there. Hopefully I'll be less sunburned by then.
All right, Alita, reach out to customer service. I just tried the calculator on my end, and they all seem to be working, so I'm not sure why it would not work for you. But see you guys Monday, 10 a.m. I've said it 3 times now. I'm actually leaving this time. See you guys.